The Bears keep marching. Vince-Lanci settles the score. Stay tuned for Reset. Hello, Vince. As always, a pleasure.
Thanks for having me. Missed you last week.
So, Vince, a lot of the people I've been speaking to recently have been quite bearish, and trust me, I've received quite a lot of feedback for it. What are your thoughts? What's the current situation for the gold market?
Well, I'm going to start by being bearish, so everyone can turn the TV off, I guess, right now. But the longer-term view is looking very, I think, rosy in light of yesterday's behavior. We'll come to that in a second. But currently, if you look at the daily chart, we'll just do this from a technical perspective. If you look at the daily chart, there is a high in February. If you draw that line down to a high in April, you'll come in at around 1662 today. That's a very significant trend line. If we break through that trend line, you should see the market go up to a couple moving averages above that in the 1680 area. Above that, you run into 1707. So that's actually my bearish scenario in the sense that there's a lot of stuff above that the market has to get through to be comfortably bullish. So we are bearish, but we're not married to the idea.
So Vince, you just touched upon the daily chart, but I know you usually tell me we need to pay attention to the monthly chart.
Yeah, the monthly, well, it's hard to get a lot out of the monthly right now for us, but the weekly, we believe, tells a lot. Now, three things happened yesterday, and correlation and causation aren't always necessarily tied together, but three things happened yesterday that make me very friendly and bullish on the market. That make me scared of being bearish. The first thing is, if you remember, and this is tied to Europe, between August and December of last year, when Europe was in the headlines every day, gold acted as a competing asset with the dollar and moved positively with the dollar. And then after December, it started moving opposite the dollar as an inflationary hedge. Yesterday, gold started out very weakly on a strong dollar, and then with the European issues, and then out of nowhere, in 20 minutes, it rallied, I don't know, $20 or $30. The gold market ended strongly up on the day, despite a stronger dollar. This is the first time we've seen this in 4 months, and it was on the backs of Portugal, Spain, and Italy having major spikes in their interest rates. And those interest rate spikes weren't because of better yields, they were because of sovereign risk. The bottom line here is we thought that was just one data point. We didn't care. We said, okay, this is just someone who's stepping in. Today, now the dollar's weaker, gold is not much stronger, but the reality is this. There are now options buyers back. We haven't seen options buyers in the market on the call side in a long time. So we took those two data points and then we looked at Elliott Wave. Some technicians really like it. So we looked at Elliott Wave on the weekly. And the weekly chart, Elliott Wave says we're in the beginning of a wave 5 higher. A wave 5 higher, for you longer-term bulls, says we're going to reach previous highs and possibly pierce them in the next 6 months.
All right, Vince, now let's go back to that pop we saw in gold last Thursday, Friday. Offline, we were saying that it's probably due to the Indian jeweler strike going on. Could this mean we might see another pop?
It's an unresolved situation, India. It's kind of been beat to death, I'm sure. People looking for reasons for in backward way of why gold rallied. You could say it contributed. I wouldn't say it would not have contributed. We were looking at it as, forget India, maybe gold rallied because there's perception of another QE because of these bad NFP numbers. But stocks sold off. So stocks would usually rally if there's a perception of an NFP number being so bad that the Fed would ease. So we were forced to attribute that rally at least partly to the bullish Indian news. However important it is, we're not sure.
Right, Vincent. For viewers new to the story, what do Indian jewelers want in a nutshell?
It's better to start with the Indian government. The coffers are empty in the Indian government. They need tax revenue. And so they've been imposing excise taxes on the jewelers for the fabrication and sale of jewelry demand. So the jewelers went on strike. It's not that unsimilar to what happened in Argentina when the farmers said, if you're going to tax our soybeans, then we're just not going to grow them. The strike was ended. It looks like the jewelers lost, in our opinion, but it doesn't mean it won't happen again. So essentially, this is a tax revenue issue.
So Vince, just to completely change topic right now, what do you think about what's being said about gold in the mainstream media? I don't want to say that Kitco News provides the best reporting, but I might. What are your thoughts?
The problem, I think, with some of your major cable news networks is they have become infotainment. Dress appropriately for the new highs in the Dow. Pay your contributors who come on TV. What's happened, though, is specifically with regard to gold is essentially in a $300 range, 150 higher to 150 lower. And you're getting a lot of flip-flopping on, self-proclaimed gurus on the market. And they're coming on saying one thing, and it's for their own self-purposes. That's why I think it's important to have guests that are bearish. Let's talk about John Nadler for a second. Probably half.
I knew you were going to say John Nadler, Vince.
Let's talk about John Nadler for a second. No. Come on. I'm going to be his advocate here.
All right.
Kitco should love the fact that John Nadler's there, in the way that Howard Stern is hated by certain viewers, because John shows that Kitco is not afraid to show a balanced view, and not a balanced view like Combs offers a liberal statement and Hannity just buries him. John says what he feels, and that's the bottom line here.
All right, let's wrap all this up. Vince, final thoughts for all your fans watching.
Yeah, fans. If you're long gold, you're buying it to hold it. If you're trading gold right now, we wouldn't be long. We'd be looking to buy a dip. If you're short, be careful below. Be careful above 1680. If you're listening to other people's advice on TV or even myself, everyone has an axe to grind. Keep that in mind, that nobody's objective when they're talking to you.
Except me, Vince.
Except you.
All right, Vince, thank you for that extended edition of Reset, and thank you for watching. As always, you can email me, please no John Nadler emails, at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambodi.